Hello, friends. Happy Thursday. Welcome, guys. We got some jumbo announcements today. Yes, that's a little pun. You'll see why. Let's share a screen and let's start talking about this week's rates. And then we got some really, I think, good stuff, right? We never purposely put bad stuff out here. I think you guys know that. But here we go. First and foremost, what are rates doing? Oh my gosh, nobody's surprised. They keep going up. Remember, guys, you can see this trend, and we've been saying it for a long time. We've just said that rates are going to keep on this slide. You can see this trend lines. Like I drew these little blue lines that are both parallel. It's amazing how they just trade in this little range, right? It hits the bottom, hits the top, hits the bottom, hits the top. Unfortunately, I think we still got a little room to keep. If we don't hold this, we can go down even more. So we'll see. Why did rates do that? Which, by the way, according to FreddieMac.com, 6%. Yes, they're in the sixes. It's been a long time, like I think 14 years since we've seen something like this. So that's with 0.8 points. And by the way, guys, this is at the afternoon, late afternoon on Thursday. Market did not do good today. So it is no bueno. And so even that 6.2, that's now out of date. It's higher than that. And why? Basically, CPI, which is the Fed's favorite gauge of inflation, still came in hot. While the good news is gas was down, it's just everything else is just up and expensive. And we know that. But the problem is that hotter than expected reading just makes it to where the market doesn't like it. Remember, inflation is the #1 enemy of bonds and mortgage-backed securities, meaning mortgages. So there you go. There's some numbers. Guys, the jumbo announcement, starting next year, your jumbo loans are going to be 715,000. So right now they're at 642, whatever, right? So it doesn't matter the comma. So 715, this is really good. So that means you can buy a home in Dallas, Fort Worth, or wherever you want and get a loan of 715,000 and not be a jumbo. That's technically starting January 1. But here's the cool part. We are now doing loans starting next week on Monday. If somebody wants a $715,000 loan, we will call it a plain vanilla conforming loan limit. Why? Because we're cool like that, because we can, because we're big, we're great, we're awesome, we're amazing. So somebody can avoid jumbo financing with us. And again, we'll close it like normal. And then it'll get delivered to Fannie and Freddie next year when that becomes official. But for right now, 715, that's your new limit. I saw an article, I liked it. It said, are we seeing a mortgage rate lockdown? I was like, what does that mean? Basically, it just means, are people going to be moving now that prices are, rates are so high and they got a 3.x or a 2.x at home? I was like, I don't know. That's a good thought to think about. But, they show the current listing levels here and the applications coming in. So here's the applications. Check this out. So here we go, back in 2014, give or take. You can kind of see these little trend lines. And yes, that's a sad looking line that I hand drew. But, is this the bottom? Do we see activity pick up? I don't know. I will tell you this. We've seen a lot more activity this week. In the last 2 weeks, we've seen that pick up. So maybe. So you figure, okay, you got all these applications. Let's go back to 2014. And why do I pick that? You'll see in a second. But somewhere around this, 2010, 2014, we're kind of down in this range. And we're somewhere where the applications coming in are still slightly better than those time periods. Here's why I bring that up. In today's world, the home supply, this 4th bullet point down, the supply is up 27% compared to last year. So like, okay, cool. And we all know that houses are sitting a little longer. And as I've been, saying on these videos, like it's 16 days or whatever it is, average on market, that's still crazy, stupid good, right? So there's all these other stats that are kind of nice. But here's the deal, guys. Household formations, check it out. Like the number of people that are becoming grown-ups and making houses, these millennials are growing up, right? So the millennials are growing up. There's more and more people. 2014, you saw the applications are where they were. Check out the number of household formations compared to where it was in 2014. Or if you want, go back to 08 when we had the 07, 08 time period. We got a ton of people that are still growing up and making households here. And get this, here's the listings. Us, red, is 2022. You guys can see it. It starts off kind of normal, and we all know it. We saw it. We felt it. Around May, things turned. And all of a sudden, you got this lack of listings that are coming on the market compared to years past. So you got more households being formed. Less things are still going on the market. So it's still a really good market. And here's the proof. Dallas, Fort Worth, home sales are down 10%. The number of units being sold, they are down. As we've been saying, this is an activity recession. It's not a price recession because the prices apparently are still up by 15% year over year. It's crazy, guys. Appreciation is still happening. People are moving in from all over the country to Dallas-Fort Worth. We are really lucky to be here. And look, I know there's pockets. You guys can email me or whatever you want to do and say, oh, well, this house is, I get it. New construction, I get it. If you got 12 neighbors and that 12 houses that just came on the market, it may be a little tougher, but for the most part, Dallas-Fort Worth is still really good. This one was something for tenants. Whether or not they want to become home buyers to be determined, but at least rents did go flat and even fell 0.1% between July and August. So at least the rental market's cooling off a little bit. I thought this was astounding. Credit card debt. It's literally a record high as far as the percentage of credit card debt that's going on. They are at $33 billion, and it's at 15%, which is the largest change year over year in credit card debt, because back in the pandemic, government's giving away free money. We didn't have anywhere to go. We all sat at home. So now with inflation like it is, people are maxing out their credit cards. And that's one reason why you could argue maybe the economy's still doing all right, is people are living on credit. Eventually those limits get hit. Eventually those people can't spend anymore. So I think that's going to become apparent here very soon. So hopefully inflation gets under check so we don't have to spend so much. But I was like, man, that's kind of getting back to the old school days. Little promo here, guys. Builder is having an open house. We're going to promote it here. You guys should show up next Thursday. I'll be there 3 o'clock to 6 o'clock. You got free food. You got free booze. You got free. There's a photographer for headshots. There's a guy doing, or a gal, I don't know. There's an artist doing caricatures. We'd love to have you. Please join us. And then lastly, we're doing a virtual. This month, we're going to virtual for our monthly workshop that we do on lead gen. I think it's lead gen like a machine. And it's not what you think. I mean, it is somewhat what you think, but there's going to be parts in there that it talks a little different. And I don't think you guys have been to one like this because I created it, and it's a little different than anything I've been to. So love to have you join us. There's your QR code. As always, guys, we appreciate you. Let us know if you need anything from us. Thank you as always for joining us. Hope the audio is okay because we're doing it somewhere different and I got a microphone, but we appreciate you. Happy Thursday. Peace. Bye.